Up, we'll be speaking with Johnny Francis from Equity Trustees because we've seen a whole heap of global funds being launched. And so let's get a check-in on what the big themes are that are driving these new issuances. Welcome. Nice to see you, Johnny.
Thank you for having me.
So we've had, if you could talk about a theme, we talk consistently about decarbonization. Does that play into what we're seeing happen and being made into products, I suppose?
Sure. Well, maybe I'll take a step back and just give a bit of context. So Equity Trustees has been around for more than 130 years. We're in a very fortunate position to have an enormous amount of analysis available to us because we look after more than 300 retail funds now. We recently did an analysis of the most popular types of funds and the trends that we're seeing. Now, clearly there were some common themes coming through there, particularly around retail products, but also ESG. So we can see these trends emerging and also global managers certainly coming back to Australia after a couple of years without being able to travel.
So, I mean, I guess, again, going back to sort of the theme question, the best thing about ETFs I find anyway, or those sorts of products is, effectively you can just kind of get a broad exposure to kind of things that you care about, let's call it that. Yep. Where's the flow going?
So from our analysis, it's really clear that almost 80% now of funds do have that retail lens. So whether that's direct or indirect through a platform, but definitely the interest has been in active ETFs. So historically there are a lot of LICs in the market and then LITs, and now we're seeing the emergence of active ETFs. And there's a few reasons for that. They do solve for the NTA discount on the price. They don't have the locked up capital, but they can keep growing. So they're very attractive from a fund manager's point of view.
And when we think about things through an Australian lens, what's happening here locally? Are the themes local?
So I would say Australia is probably a little bit behind London and New York in that regard. So I think what we're seeing really is those trends now coming much stronger into Australia, particularly around the ESG.
And some alternatives as well. I can see that you've got here a little bit more, I suppose, boldness from local investors to try new things. Yeah,
well, that's the beauty of the active ETFs. There's a lot of thematic based ETFs now that are coming to market, but I think managers are really looking just to differentiate their product. If there's too many products of the same particular asset class, then the only way to differentiate is either on price or moving into the alternatives. So we've seen a lot of interest in currency funds, venture capital, private equity, and even carbon neutral funds now.
Crypto?
Absolutely, that's the word on everyone's lips. I like to call it digital assets, but we're certainly seeing a lot of those. We saw 3 active ETFs come to market very recently, and I'm sure we'll see a few more.
Okay, and when you think about what this means for what's to come, like you look at trends and that's what's happened already. So where do you see things going?
I think from a point of the investor, we're seeing a lot of millennials and younger investors coming to market, particularly during COVID we saw that. We expect to see much more liquidity or products that are offering liquidity and ease of access. Investors want to go through their smartphone or a micro-investing app or an ETF. So gone are the days of filling in paper-based application forms. So we really do see a trend towards listed products, particularly as younger investors are coming to market.
I mean, a lot of the appeal of these products is the sort of passiveness of them, I suppose, in many senses. But do you see, especially among some of those maybe younger and more, risk-tolerant investors, that there is a lot more, I suppose, active buying of different areas of the market, creating a broader suite of sort of a broader portfolio of products?
I do. I think we've seen a lot of thematic ETFs, which are very passive and potentially I wouldn't say they've had their day, but they're definitely stalled in terms of the flows. I think the real key there is to generate alpha, and the active managers are definitely going to see more of the flows.
Okay, and so when we wrap it all up in a bow, is there any sort of indication that in these volatile times that we're seeing less being allocated, more being allocated, a real change in the preference? Where do investors and product developers really look for those alternatives?
Well, it's cyclical, right? So I don't think the flows will drop because superannuation increases year on year and the industry keeps growing. It's just where those flows will go, which type of funds. It'll be very interesting with interest rate rises and where asset prices are to see where the funds are allocated. If I had a crystal ball, I could tell you, but I don't. But I think having diversity is going to be really key to different managers.
Okay, so I mean, given the recent volatility as well, I mean, has there been a sort of a shift in behaviour? Have we seen sort of more, again, defensive ETFs taking reigning supreme? Has interest in the space diminished at all off the back of this?
Yeah, so recently we saw that global equities and domestic equities were extremely popular. I think more than half the funds that we established were in that space, but also a lot of fixed income, particularly domestic fixed income credit funds were very popular. I think we'll see that probably shift. I think you're right, there will be a shift towards the defensive style of investing. People are a bit nervous at the moment, but then there's certainly some opportunistic funds out there that will do very well in this market.